Our final panel discussion on Australia Property Fund and credit investment trends. May we have up on stage Mr. Ben Greentree, founder and managing director of CCS Development Group, Mr. Anthony Guy, managing partner at Wholesale Capital Partners, Mr. Richard Palmer again, partner at Horizon 2 Capital Partners, and Ms. Jacqueline E., Chief Executive Officer of Apex Asset Management.
Good afternoon, everyone. Thank you very much for staying on for this panel. It's been an exciting day of news. I don't know if anyone's been out or been on your phone listening to the news. RBA's made some announcements, Bank of Japan, and then on the IT side, I think some of the investors here are looking into technology, and NVIDIA has just launched Blackwell. So how about, I know some of you weren't here in the morning, I wasn't here. Perhaps we'll do a quick round of intros. We'll start with Anthony, and then Richard, and then Ben. Please, yep.
Hello. Hi, Anthony Guy, Managing Director of Acos Capital Partners, here to, share what we've learned along the journey about private credit, and in particular agricultural private credit in Australia.
Richard Palmer, I've introduced myself, a partner in Horizon 2 Capital Partners. We're a PE firm in Australia that specialise in advanced manufacturing businesses.
Good afternoon, Ben Greentree. I'm a property developer in Australia, and we do both residential and industrial, and I spoke earlier today about the industrial developments that we do.
Hi, I'm Jacqueline. I head up Apex Asset Management. We are backed by the Australian Bond Exchange, which is a public listed company in Australia. And our Aussie operating company has license to run and operate an exchange for fixed income securities. Based in Singapore, Apex Asset Management, we are financial advisors, regulated under the purview of the MAS, and currently getting our license to manage investor money, investment management, and funds onshore here in Singapore. So let's kick off the conversation. There's been quite a lot of development over the decades for those of us who've been around, and particularly in the property space in Australia. When I was doing property financing back in the 90s, I would like to sort of have a chat with you, Ben. What do you see are the current trends in property development over there on the construction side, and how do you see the financing sort of following through? And if you'd like to comment also on some of the property constructions here in Singapore, and then we'll carry on.
Okay, so the question in regard to finance and how do I see it. So what I spoke about this morning was we tend to use a lot of equity in the early stage and then go into bank debt to fund construction. And in the opening slides that Steve had this morning, he was talking about the growth of the non-bank lending. So there's a few people here today that are in that space. So we're now starting to see lenders that will want to lend almost 100% of the cost of development and have a lot fewer hurdles for the developer. So while you can go to the bank, you can also now go to this bigger market of private money. So.
And tagging on to the non-bank lending side, it's actually been very, very interesting since the Royal Commission recently. And I think, Anthony, your firm does a lot of private credit lending, financing, am I correct?
Yeah, that's right, we do. And it's interesting you mentioned the Banking Royal Commission. I mean, they were quite scathing about the traditional bank's treatment of Australian farmers. And I think the overall effect from that is a sense that the banks could have done a lot more to act more fairly with respect to the agricultural borrowers, just understanding the nuances of the risks that they face. But the flip side of that is they have retreated even further and tightened up their lending parameters to agricultural businesses even more. One of the worrying things is the average age of the Australian farmer is getting older, not younger. Yet, Westpac Bank, just to name one randomly, does not want to be on the front page of the news booting a 79-year-old farmer off their home, off their land, out of their business. So, whilst it was supposed to improve the outlook for Aussie farmers, it's probably done them a bit of a disservice in terms of reducing the overall willingness of the banks to lend to that sector.
Do you see that as an opportunity then for participants and financiers like yourselves to come into the space? I've started in traditional banking and then moved into alternatives to external providers, be it investment funds or family offices that have corporatized into huge institutions that lend on a more customized basis to niche sectors. And I think agriculture is very important currently with the thematics of circular economy and funding and understanding the flow of food from source to table. So I would think that this would be a much better segment for private sectors to weigh in financing and also providing expertise to the investees. What are your views on that? Stepping in where the banks were not able to facilitate the money flow.
Yeah, absolutely. And you make a couple of good points there. You mentioned that connection between, where your food comes from and coming to the table. And I think that's one of the things that the sector suffers from. Like it or not, most of the money and most of the private money is in Sydney and Melbourne, in the cities, in the high-rises. There's a disconnect between people understanding agriculture and where the food comes from. They can't touch it, they can't feel it, they can't see it, but they can see the apartment blocks and the townhouses and, sorry Ben, the things you do. We recently took a dozen school kids from the city out to a farm, to a dairy farm, to show them where the food came from. And it's just things like that to try and increase the connection between the city and the land that will help eventually with those funds flows. As an aside, half the kids decided they were going to go off milk and become vegan after that trip. But they've got to get their protein from somewhere, so that'll come from grains, etc. The other point you make is about the ability for non-bank lending to step in where the banks won't, and I think you're spot on. I mean, the banks are heavily regulated. If a borrower goes into default, they need to provide equity capital against that on their balance sheet. It's really an inefficient lend when they're only getting maybe 100 basis points over what they would for a traditional commercial loan, and they're pulling the banking managers out of the regions. They're cutting costs, they're bringing everyone back to the cities, and the lending decisions are being made by computers. So you're losing that touch with, okay, I'm going to lend to John, he's just starting out, but I knew his dad was a great farmer, so this guy will be a good farmer. You're just losing that connection. And if the computer says no now, the computer says no. So more and more Aussie farmers are just falling outside the parameters of mainstream lending.
Yeah, I see that. And before Richard, I just wanted to sort of draw a connection here also to the local audience. So I judge Slingshot every year, and green tech, agri-tech, and transition energy is one of the segments that they've asked me to judge in the last few years. So I'm just trying to draw sort of highlight to the fact that perhaps there still needs to be a lot of education of the community beyond, including bankers, of what it means to finance, bank, and invest in agricultural companies, agricultural endeavors, as well as perhaps with the increase in, or with the advancements in technology, perhaps that could be the bridge, because more and more so we're seeing agri-tech coming into the scene, where then you're bringing the hydroponic side of farming closer to the cities. I'm not saying it's solving the problem, but then it's bringing the awareness to, let's call them Joe Blogs, who previously would not be close to the land, to see in the restaurants that vertical farming, this is where your vegetables come from. A sense of relatability, and then a sense of education, and then the need to demonstrate that money needs to go to these segments and not just bricks and mortar or the sexy technology that's thematic of the day. So I'm just wondering, perhaps let's not lose faith there. And I'll come back to you, Anthony, and moving on to Richard. So financing advanced manufacturing technologies. What do you see are the segments that are attracting the most capital? And where do you see are the innovations and technologies that are the most successful in impact solution generation and in financial returns to investors? Two different aspects, right?
Lots of questions there. So one of the reasons that my partners and I formed Horizon 2 Capital Partners is that we're all old enough to remember when it was impossible to raise money for a software business. And I used to try and raise money for software businesses in the late 90s. And of course, that's not the case now. So markets are now dominated, both in private equity and venture, with organizations that have got deep software and hardware capabilities. Around the world, it's almost not impossible. It's extremely difficult to raise money for manufacturing businesses that make stuff, who make physical products. And the reality is the world is run by stuff like this, which is made. And so we've got a passion about creating scaled global manufacturing businesses, and we think it's crucial because if you don't make things, you can't run efficient economies. So that's why we do what we do, is because fundamentally we think products like the Gravit technology product and our other investments are really important. Now, how do you make money in that? Well, it's a little different from a software business because you invest in inventory and you invest in manufacturing. These are capitally intensive businesses. And the way you make money is to make sure that you understand how to run and develop good manufacturing businesses. And that's where we see the opportunity. We've got 5 operating partners, including Andrew Liveris, who's the ex-CEO and president of Dow Chemical, the ex-Asia Pac CEO of Airbus, and then people like me who've been operating and running businesses for many years. And to make money out of manufacturing business is different. It's a bit like an agricultural business. I own an agricultural business. It's hard work. The point I'm making here is that you've got to really understand what you're doing. And we have 3 key criteria that we look at. First of all, we're interested in deep tech. So manufacturing is the original technology industry. So businesses out there with deep IP who are selling into global niches, fantastic opportunity. The second is they need to be able to sell and sell into global markets. And last but not least, they need to be able to produce things really effectively. So they're the 3 things that we are very focused on in the businesses that we're operating in. And the good news is that manufacturing is not dead in Australia. It's not dead in Asia. There are some fantastic companies that are extraordinarily good at doing that at scale. And our investors are reaping the rewards as a result.
So do you think there are collaboration opportunities in deep tech manufacturing techniques in the agri-sector?
That's an awesome question, and the answer is yes. So we have 4 key verticals that we look at. Food and beverage is one of them. So our first investment was in a food manufacturing business, and to your point, you've got to make food, you've got to produce food. So we will look at organisations and technologies that make more efficient food. So agriculture absolutely is part of our remit. We also look at what we call smart manufacturing, and Global is an example of that. So this is organisations with really strong deep IP that have an IP platform that they want to take to the world. Last but not least, we're also a big believer in selling complex components into very deep supply chains. So I'm thinking about aerospace, defence, and also some of the medical industries around the planet. The large primes all need a supplier base to make the things that we all take for granted, and there are not enough manufacturing businesses on the planet at the moment to deliver a lot of the demand that's out there. So that's the opportunity that we're looking at.
So going back to the the agricultural dilemma, how and what would be your advice, Anthony, do you think, that would attract more smart money into the agricultural sector to solve the rural farming problems?
Okay. So look, we focus at the real riskless end of the market. First mortgage lending into agriculture. It's as boring and as far away from tech as you can get.
Okay.
And that's deliberate. I mean, there's a gap there, and we're focusing on it. We're constantly presented with opportunities for equity investments or in, innovative ag tech businesses, and there are some really good ones here today. I think in terms of the confluence between what we do and tech, there's a lot of really clever imagery stuff out there. So, for example, if you want to lend working capital to a farmer and you want to lend it against an event, they've planted their cotton crop or whatever, there is technology out there for satellite and GIS imagery to be able to look at that farm in real time and say, yep, your farmer has planted their cotton crop, it's all okay to release that other tranche of funding. So there's some really exciting things out there. And Australia is really good at developing those sorts of technologies and taking them to the world, particularly in agriculture and particularly in food. I mean, to your point, food manufacturing is our largest manufacturing sector. So
Yes.
there's a lot of connections between the land and manufacturing and property.
Do you think there should be a closer connection between corporatisation and the actual farming activity in the farming communities?
No. We have never, and look, this is where we struggle. And there are very few ways to participate in Australian agriculture. Private lending might be one of them. The other is via managed funds, and managed funds go out there and they corporatise the farm, and they have this bigger is better model. We will buy 30 cattle farms and we'll stick in a couple of dams, we'll stick in a layer of management, and suddenly we'll flip it and everyone will make lots of money. It's not like that. Farming is a tough business. The best people to do farming are the family groups. They are the ones working 70, 80 hours a week. They're the ones up carving at 2 a.m. They're the ones living off $60,000 a year. But that's the most efficient way to...
Subject to the weather.
Subject to the weather, but also if they can just hang on to that land for a couple of generations, they'll do really well. So outside of horticulture, which is the only exception, we don't see a huge role for corporatisation in Australian or in farming, and we're yet to see a model that really works.
So for Ben, have you done recently any property developments or construction in the more rural segments of Australia? And if so, what sort of structures were constructed?
So we're predominantly in the southeast Queensland area, which is sort of Brisbane and surrounds, and between Sydney and Newcastle. But we have been venturing further afield. We've been to Toowoomba, and we're about to head up to Townsville, which are regional centres, because I think there's good opportunities there. And currently what we are doing is we're building, and it sounds like there's a good demand for manufacturing, so they all need somewhere to house themselves. So we're building industrial warehouses. That's what we're doing at the moment.
Are there a lot of automation built into the industrial warehouse from the vendors who take over?
So we're not in that end of the market. We're building flexible space units to appeal to a wide range of end users, and then we get the tenants or the end users to fit out their own fit out.
Okay. So, Richard, the confluence of robotics and PE, and I like private credit space, you know, so I think there's a lot more to be done in the private credit space and also in, you know, fixed income, because that's a cash flow stream back to investors that's not been explored enough in this part of the world. So where do you see, you know, with robotics, the speed at which the commercialization happens once it's flip the switch is a lot faster than a lot of the traditional business. The trajectory is very much exponential. So how do you see that sort of the investor base into that segment differing from the more traditional manufacturing, and how can we bring money to where it's needed?
So I'm going to be a little bit controversial in that I don't think robotics and manufacturing is necessarily the answer. It can be. So when we think about manufacturing, and we think about three key things when we're looking at a business. So for us, manufacturing isn't just about production, which is where the robotics is really important. As I said earlier, the first thing we look for is deep IP, and we look for organisations that have really strong design and research capabilities so they can create and design product. And we look for IP portfolios. The second thing we look for is an ability to sell into markets, into Singapore, into the States, into Europe. And the last thing we look for is an ability to make the thing really efficiently. And that's where something like a robotics line can be really helpful. But if you're making a PCB designed product like the grabber product I showed you earlier, we will make 20 or 30,000 units in a year, and that will be 20, 30, 40 million dollars. We don't need a robotic platform for that. Where we might need that is if there's 100,000 or 200,000 units required. So the point I'm making is that in any business, you need to make sure that you're putting the right investment and the right technology to push the manufacturing pipeline. Now, notwithstanding that, robotics and what we call Industry 4.0, which is not just robotics, but it's AI, machine learning, is a really important way of making a very efficient production capacity. It's typically not where the value is created. So if you looked at a unit that's sold for $100, you'll typically find that the robotics or the production component is only about 20 or 30% of that. So you make your money in the deep IP and selling it really well. All three need to happen, and at scale, things like robotics are really, really important. The last thing I'd say is that, and I'm probably in the wrong room to say this, but the cost advantage that Southeast Asia has had is disappearing really quickly because of things like robotics. So it is absolutely democratizing the production process. So to be successful anywhere in the world now, doesn't matter whether you're sitting in Singapore or New Zealand or Australia or Europe, you have to have product with really strong IP that can be delivered into a valuable supply chain, which is essentially the organisations we love to invest in.
Yes, very compelling, very challenging. Yes, with the IP story, that's very, very challenging. And the increase in cost of living, cost of production everywhere. A lot of the markets here, as you say, are losing out. And Eastern Europe's too far away, and then there are logistical problems. Now, Richard, Anthony, going back to your side, what would be your parting words to the audience here, to, I think it would be the investor community rather than the farming community? What would you like to say to increase more awareness? I have family members with farms back in New Zealand. So some of the aspects in terms of technology, advancement to help monitor monitor the farm, monitor things when they go wrong sooner rather than later, is something that is quite close to my heart. But what would be your parting words to potential investors here for the agri sector in Australia?
Thank you for that. Look, and yeah, we recognise that New Zealand suffers the same problems Australia does in terms of access to funding. Look, I think these things are all linked. I mean, if you look at the agricultural sector in Australia, the overall level of gearing is 15%. That's really low. That means 85% of the value of these farms is locked up and not being accessed. So if you want to talk about innovative technologies, fancy smarts in your dairy, tracking each individual animal's health, mapping how much fertiliser is already in the soil so you don't over-fertilise, all those things require investment that is not necessarily going to come from the banks. So anything that can be done to increase the size of the private lending pool that is able to unlock some of that capital and put it to productive uses can only result in more efficient farms in Australia and globally. So I urge you to consider agricultural private credit as an addition to your portfolio, sitting alongside your apartments and your residential private credit. But it's a wonderful asset class. They're not making any more farmland, and food security, well, as Singaporeans know, is a number one global priority.
Yep, and it's great diversification of your portfolio as well, urban and rural. Yeah.
Absolutely.
With delicious tucker. I get my eggs from New Zealand and Australia, so I get my meat from down under as well. But now back to you, Ben. So what would you like to say to sort of the investor community here of the USP you see in the property developments in Australia versus Singapore? Singapore, as is evident, is land scarce, and so investors looking for good bricks and mortars opportunities. Perhaps you could share some parting words.
Well, strangely enough, you said they're not creating any more farmland. You think Australia is a big country, but to actually build on land, it's quite a process to unlock that land. So strangely enough, there's a shortage of land to build on for the market we're in, which is industrial real estate. And Australians love property. Everyone wants to talk about property, whether it's residential or it's commercial. So yeah, we're offering an equity investment in commercial property development. And at the moment, Australia's going through, and other parts of the world are going through an industrial property boom. So we're capitalising on that space. And we were in it before that was happening, and we're quite happy to be there now.
So, did you want to have a final word?
Well, if that's okay.
Absolutely.
Well, I'm exposed to the industrial property space in Australia. I own land and a farm in Australia as well. So I think the parting comment I'd make for investors in this part of the world is that the alternate asset managers in Australia are world-class, and they produce world-class.
Some of them are here.
And I think hopefully 3 of us are here. So I would really encourage people that are investors that are looking to diversify, family offices, high net worth individuals who are looking to diversify out of the Southeast Asian market to consider Australian alternate asset managers. We've been doing it for decades. We know how to build really strong long-term relationships with our investors. And we've got a really strong track record of delivering high-performing returns, whether it be private equity, private credit, or even the industrial portfolios that you're building, Ben. We're here. We'd love to chat. We'd love to build relationships and bring some assets and some value to you all.
And I would encourage all of you to start your funds here, so that, and then leave it to very experienced investment managers to manage, someone who understands the cultural nuances both in Australia, and the investors who might want to leave their monies here. And there's actually been inbound capital into Singapore. So there's $5 trillion here in Singapore in AUM for investment, and over 75% of that is inbound. So if you are interested in deploying capital into Australia from here, that is managed by a really good investment manager who understands Australia and has relationships there, look no further. Sorry, shameless plug. And to all the Singaporeans and residents here, you know, come speak to any of us who are very familiar with the Aussie market if you are interested. I've been around 35 years, was in Australia for over 12, doing deals there. So yeah, with that, I wish everyone a good afternoon. I hope you had a very enlightened session with all the great panelists. Thanks.